What's going on, traders? Welcome back to another video. In this week's video, I want to share how an impulsive decision can wreck an entire week or an entire month of a disciplined and hardworking trading. Let's jump right into it. Okay, everything started on Monday where I was taking a short trade. I took the short, stopped me out for a loss, and immediately started to work. Fortunately, I had a footprint signal. I re-engaged and ended up winning the trade. On Tuesday, I did not take any trade. The market moved so fast, I didn't have any signal, so the market kept moving and I couldn't engage in any trade. On Wednesday, first trade I took, another short, losing trade, stepped out to the tick, I re-engaged, and I was watching my trade, making money, and suddenly it got straight to target price. When it got straight to target price, didn't fill me out and it started to bounce. This is a matter of 5 seconds, right? I see prices tapping my limit order to close and bouncing off of it. When I saw that bounce, I impulsively, I didn't think about it. I just had my hand on the mouse and hit close. I was scared of losing money. I was scared of my trade reversing on me. And in a matter of 10 seconds, it went straight through my target and kept going in my direction. So this started to create some emotional build up in my mentality. I started to analyze what I did, and the fact that on Monday I took the first trade losing, and on Wednesday I took a losing trade as well, stepped out to the tick. Then reviewing my statistics from last month, out of 49 trades that I took in the entire month, 10 of them were losing because I had the stop too tight. Stop too tight means stop me out and for a couple ticks, and then it goes in my direction. So it's very frustrating. I see the ATR expanding. I see VIX going up. I feel the volatility in the market increasing, but still I wanted to risk the same dollar amount I was risking 3 weeks ago, which is completely unrealistic. That's why traders need to adapt to market situation. And that is costing me a lot of money. Not only because of my losing trades, but because those losing trades were winning trades. So quantifying that is a very high impact in my trading account. So after I closed the trade impulsively, I took another trade. It was a scalp trading. You don't see me scalping, but that day I was clearly frustrating in my C game because I sacrificed half of my profits in that trade. I was aiming for $1,500 of profits and I ended up getting like 720. And you say, but Franco, you still won. I did, but my mental account was not thinking about that. My mental account was thinking I made a mistake and I was paying a toll mentally. I was just dwelling over and over again on the situation. So I closed the trading day on Wednesday positive, and I find myself just thinking of those two mistakes over and over again. Guess what? Next day on Thursday, came here, took 2 losers in a row, and now my mental state is devastated. I took a third trade, lost again, and then I thought, well, you don't have to be so tough to yourself. You can have a red day, even though you read the market good. Sometimes you will have red days, and I tried to lie to myself saying, all right, so red days are gonna come and you need to accept them, right? But I'm out of my trading desk, just doing personal stuff, working here in the house, whatever, and I just cannot stop thinking about the mistakes that I made. And not only that, I cannot stop thinking about in September I did the same mistake and I'm not capable to change them. Yesterday, Friday, I was excited. NFP, unemployment, we will have some volatility. We can have a very nice trading day because of the volatility. And same thing happens to me. I start trading. I took 1 losing trade, and then the second one stepped out to the tick. The third one, I re-engaged. Same pattern. Losing trade, then it's working, re-engaged, I'm profiting. Now this time it didn't get to my target. It reversed very quickly, and that's where the market just reversed to the upside. Fortunately, I had my stop break even. I didn't lose in that trade. But now, even though I'm not losing too much money, around $600, but now my mental account is in very, very negative balance. I find myself just not tolerating one mistake and just thinking, oh my god, there's this is stupidity, is insanity. You're doing the same mistakes over and over again. Now remember, I got over the stage of oversizing and overtrading because I have binding strategies. Even if I want to break the accounts, I cannot do it. So in that regard, I've improved big time. I don't find myself just trading recklessly to inflict pain on me because I made mistakes. Things that I used to do in the past because I couldn't forgive a mistake that I made. So one thing that I applied is one thing called Inter-Temporal discounting, where I wanted to take another trade, and then I thought, how would I feel if I lose one more trade? And I'm debating, I am going through moments of consciousness and unconsciousness about my attitude towards my mentality or my state of mind. But I ended up not taking any other trade, trying to cool off. But I stopped trading yesterday and went to do other activities, but I was dwelling over and over again that I had a very good week projected, and then ended up being a break-even week. So I sat today and said, all right, you need to clear out whatever happened to you during the week. You need to start next week with clear slate and not bring that baggage to the next trading weeks, because you're gonna keep wrecking your next weeks and month. So I don't want to do that. So what I did is I went to this book by Denise Scholl, Market Mind Games, and I found a very good ways to try to clear up my emotions. And there's one part of the book that says, give up the getting rid of the emotion. So I don't want to get rid of the emotion. It's impossible for humans to not have emotions, either in trading or in any other part of their lives. But all right, I cannot get rid of the emotion. What should I do, or what I have to do? So number one, and she says, anticipate, right? Just accept the fact that you have emotions, that humans, human beings, you're gonna experience emotions, right? Try to use them in your advantage. Number two, just notice them. Recognize that you you are feeling such or such emotion, right? And number three, name them, right? Use these 5 main categories of emotions, which are anger, fear, disgust, sadness, and pleasure. So you can fit any emotion within one of these 5 main emotions that humans experience, right? And try to categorize or try to name them. All right, what am I feeling now? I'm feeling sadness, or I'm feeling anxious. Why? Because I'm worrying about future, and I'm feeling like I cannot be a trader if I keep making these mistakes, and so on. So just making this video is sort of a journaling technique for me, because it's so powerful just to clear out those emotions that I experienced during the week, so I can come on Monday and see clearly that if I want to risk 1.5 points, and I am not including the invalidation point, if you want to call it a pivot or whatever I have determined that is the invalidation point, I need to include it in my trading idea. If not, I'm taking the risk of making the same mistake. So in conclusion, it's very important to become aware of your emotions, so you clear them out, and subconsciously you understand that you're gonna make mistakes. Now the important part here is just recognize them, don't dwell on them, and try to not make them again in your next trading idea. This is a very short video. I hope you liked it, and if you find value, please consider subscribing to the channel so we can grow and reach more traders. Thank you. I see you in the next video.